Hi guys, Edward Tapia Jr., Texas real estate agent with Dallas Luxury Realty. I went through a training with one of my preferred lenders and they talked about a lot of good tips on helping renters become home buyers. From my experience, I know if you're renting right now, it's either due to your credit, a lack of down payment, or not making enough money. I want to talk about a few things that will help you overcome those obstacles. If it's your credit, one thing I want to tell you is that you're not qualified to qualify yourself. All right, I talked to renters and I asked them, "Have you considered buying?" And of course, they tell me, "No, I'm not qualified." And I said, "Okay, who was the lender that told you that?" And I said, "I didn't talk to any lender." Guys, you, I've seen it where a renter has thought they weren't qualified for a home loan, talked to a lender, and got qualified. Okay, if you talk to a lender to determine if you're qualified or not, you'll find out one, if you are qualified, congratulations. And if you're not, I know you're thinking, "Oh, he didn't tell me anything I didn't already know." The thing is, if you're not, they can tell you something that you don't know. They can analyze your credit with a tool called a credit analyzer. It will go over your credit report and produce a report that will have steps you can take to help you improve your credit. It will tell you exactly what to do. For example, pay $5 on your credit card, or anything like that. If you take those steps, it can move your credit from an unqualifying credit score to a qualifying credit score. Okay? So talk to a lender, let them tell you whether you can qualify for a home loan or not. And if you aren't, let them help you get into a position in which you can. Okay? If down payment is the problem, there are four different down payment assistant programs you can learn about by talking with the lender. There's the T-Shack, Seth, VA loan, and city and bond programs. All of these have different requirements and benefits, pros and cons. Okay, VA loan is obviously for those who are vets. The T-Shack is called a Heroes Home Program. It's for teachers, some medical professionals, obviously our Leos, so on and so forth. If you want some more information on that, I can produce another video. I mean, it can get pretty deep as far as the intricacies of each one of those programs. Seth, awesome down payment assistance program. The VA loan is obviously the best, but unfortunately, it's only for unfortunately for those who aren't veterans, it's only for veterans. Um, and city and bond programs, those are good. You'll have to make your own personal decision on whether you want to actually move forward with one of those. The enticement behind that is to keep you. If you, let's say you get a grant from the city of Dallas, what they're trying to do is encourage buyers to stay within the city so that that tax revenue um, can stay in circulation there. So you'll have to determine if that's a route you want to take. If you get with your lender or real estate agent, they can help you make that decision. Just a few of the highlights, though, is that with these down payment assistance programs, you can get qualified for up to 6% to go towards your down payment. Okay, this includes your closing cost. If you were to go, and they can be applied to an FHA loan. Let's say I'm talking about the Seth. If you get an FHA loan, they only require a 3.5% down. Okay, but if you use the Seth down payment assistance program and could qualify for up to 6%, not only does that cover the 3.5% down, but it also leaves room to cover the closing cost. Typically, I estimate about 2%. That's what I tell my clients what to expect as far as closing costs go. So let's say it is 2%, the 3.5% down plus the 2% towards closing cost. If you qualify for the up to 6% toward the down payment assistance, that covers everything. So yes, I'm telling you, you can move in with no money down. Okay. Um, if you want to learn more about those programs, reach out to me. We'll talk in detail as far as what your credit score has to be, um, and any other qualifiers that are important to determine if you can qualify for those programs or not. Odds are you can. Let's just talk about it. Let's get into the weeds for it. All right, the last thing is the DTI, the debt to income ratio. This determines pretty much how much of a home loan you can qualify for. I just want to touch on it real lightly and say that the rules have changed a bit, and they've loosened, and they've allowed for a higher DTI. Typically, you'll see from 40 to 45% DTI requirement, but now they're allowing lenders to go all the way up to 50%. I know that sounds dangerous, but they're doing it. Now, of course, just because the rules allow a lender to go up to 50% doesn't mean that your lender that you choose will actually go up to 50%. They can have self-enforced rules and guidelines and keep it at 40-45%. The lender that I work with, the lender that I'm getting all this information from, they go up to 50%. Okay, they're doing anything and everything they can to get renters qualified to become home buyers. Okay, all right, those are the three things. These are the three things that are typically keeping renters from becoming home buyers. Their credit, it can be worked on. Just get some help. Down payment assistance. You don't necessarily need to have a huge savings account right now to get into a home. There's programs out there that can help cover that. Talking about no money out of pocket. All right, in DTI, it's easier to reduce the debt portion of that ratio rather than increase the income. But if you can do both, awesome. Okay, guys. Edward Tapia Jr., Texas real estate agent with Dallas Luxury Realty. I hope you found this information valuable. Whatever questions you have, please send them to me.